Welcome back. We continue with more analysis of that MPC meeting that was delivered by Reserve Bank Governor Lesetja Kganyago. We are joined by Arthur Kamp, who's a chief economist at Sanlam Investments. And Arthur, I want to talk to you about some of the aspects that came through in that particular statement. I'm curious from your perspective, do you believe that the supply challenges and the bottlenecks will continue even regardless of what is happening regarding the tensions between Russia and Ukraine? How are you seeing that supply side issue that we've been talking about?
I think it's a very important question. These supply side shocks are not just related to oil and food prices and the Ukraine conflict. They've been building throughout last year, and a lot of that was due to the ongoing COVID pandemic. And particularly last year when the Delta variant hit emerging markets of Asia, there was quite a lot of tightening of economic restrictions, and that fed through into significant bottlenecks in the manufacturing sector, especially in countries, for example, like Taiwan, which are very important in the production of semiconductors. And we know that has been a large problem for the motor vehicle industry. That industry is starting to recover its production globally now, which is a very good sign. But for a long period of time there was a significant bottleneck effect. And we've seen that in South Africa because, if you look at durable goods prices and semi-durable goods prices, most of them are still very contained and low, those inflation rates there. But for vehicles, we've seen some price pressures coming through. And so it is important, I think, that those economies in EM Asia get going again. I think if the Omicron variant, if that can be relatively well contained or managed, and countries in emerging markets of Asia can start to return towards robust production this year, I think that would make a significant difference. I think it's still a reasonable base case to work with that through the course of this year. We're going to get a decline or at least slower in global inflation as these bottlenecks do ease. The problem, though, is that it might not be fast enough. And I think inflation is still maybe going to remain higher than what central banks would like for a significant period of time. Clearly, that is what the Fed has been worried about. And that's why the Fed sounded so hawkish earlier in its March FOMC meeting.
Let's hone in there on the Fed. I mean, the one thing that Reserve Bank Governor Lesetja Kganyago mentioned is that they are not really in the business of matching the Fed, and I quote here, basis points for basis points. Has that always been our, I suppose, non-economics assumption that whenever the Fed moves aggressively, South Africa risks being behind the curve if we don't try to play catch-up? Let's dispel that myth right now, if possible, about whether the Fed moves. Does the Reserve Bank have to move in tandem?
No, it doesn't, and it'll depend on what happens when the Fed does hike. I think one thing we do need to bear in mind, though, is that interest rates in the US, risk-free interest rates, have been very low. And that has for years now been helping to underpin the carry trade. And so the SARB is mentioning the uncertainty around financial markets in terms of potentially risk appetite waning, and then that feeds through into capital flows. So there is the potential that if interest rates in the US go up, that possibly those capital inflows start to leave, or at least flow in less robustly. And if that is the case, then it's possible that you do get pressure on the rand. Of course, what is helping the rand at the moment is export commodity prices. So, even though global risk aversion has gone up, as a commodity producer, we've actually benefited. Our current account is still expected to stay in significant surplus, so that's helping the rand at the moment. But over time, if the Fed does follow through, and it's also a case of data dependent, but if the Fed were to follow through on the projected path for the Fed funds rate over the next 2 years, now that's quite a significant change over an extended period. And if that, for example, were to lead to a lot of volatility in emerging markets and our currency were to start weakening too sharply and inflation, and that feeds, we're a small open economy. So the inflation rate is very important. The exchange rate is very important for our inflation outlook. If that leads to higher inflation expectations and higher inflation itself, in that instance, the Reserve Bank normally does respond. So I think that's the issue. It's a protracted long period of Fed tightening. given what we know currently, that seems to be the case. And if the Fed does follow through on that, and we do get those kinds of factors coming into play, weakening our currency and driving up inflation, then and the SARB would react to that to contain inflation.
When it comes to the Fed, is it a case of how fast and how far they go when it comes to the issue of rates?
I think it's very much, I think it's how far and how fast is important, but I think what is important is relative to what the market is expecting. And so, over the last while, we have seen a significant increase in expectations of market participants. And so, from here on out, I think a lot will depend on how fast or aggressive the Fed is relative to that current expectation, which is quite aggressive at this point. Feeding back into South Africa, I should mention on the rand, commodity prices are helping us at the moment. But I think one thing we need to know is that central banks tighten or increase interest rates for a reason. One of the things they're trying to do is slow economies down. So high commodity prices today, we can't predict the future, but they may not be high next year, and they may be weakening next year. And if that's in an environment where the Fed is tightening, then unfortunately it spills over to us. Yeah.
Let's focus in then on that South African economy that he expects to grow by 2% in 2022, 1.9% for both 2023 and 2024. And it's quite fortuitous that we've got the SA Investment Conference taking place today on the day that we have the MPC and on the day that we want to talk about that economic growth. What's needed here? Because at some point, the Reserve Bank, the central bank, can only do so much. There are other aspects that are needed here. I mean, how are you seeing us being able to achieve, this 2% growth, but even at least try and push it up a little bit?
I think that is the critical question, and I agree. The Reserve Bank can only do so much, and its main contribution is to maintain a low, stable inflation rate. That in itself has positive growth impacts. We need there are a few things we need to do, but I think we are starting to see the first building blocks being put in place. I think there are a few main pillars to what we're trying to do to get growth going, and I think a lot of them are around improving infrastructure and putting the infrastructure in place that will allow investors to come in. For example, I think getting energy right is very important because if there's not certainty about energy supply, then it's very difficult to put up a factory, especially if it's a factory that's energy intensive and you're not certain about the future supply. So certainly I think that is a very important aspect of what we need to do to start lifting our potential growth rate. The building blocks are in place around the changes coming at Eskom, around the independent power producers, renewables, increasing the allowance for embedded generation. These will, of course, take time to filter through, but I think those are important building blocks, and I think that's starting to move in the right direction. I think that will make a big difference. But there are other aspects to this as well. For example, in terms of transport, where we're looking at more corporatization or commercialization that we've seen of ports. We're talking about allowing private sector access to freight, to rail freight. So again, important component of infrastructure. And then the other aspects are aspects like artificial intelligence. The spectrum auction is very important, and access to broadband could be a particularly important development for us going forward. Again, an important component of infrastructure. And there are a number of other initiatives on the way around water. We need more certainty around water pricing, and of course we're moving on water, the licensing aspect of it. So there are a number of building blocks that are being put in place, but because we're talking about infrastructure, it's going to take quite a while to get up and running, and then but that's necessary to attract investment. And I think if we get those aspects of our development plan right, it would make a significant difference to investors' willingness to want to invest in South Africa. But for now, as the Reserve Bank says, our potential growth rate is very low. And again, one can't stress it enough, but infrastructure is such an important component of enticing investors to come and deliver fixed investment into the economy.
Arthur, we've got less than a minute here, and there's so many other aspects that I would have loved to engage with you on, especially when it comes to that split that we did see with 3 of the members voting for a 25 basis point hike, 2 of them saying 50 basis points. And I would have wanted to engage with you on the implications if we have had that 50 basis point hike, but we have run out of time. Thank you so much, Arthur Kamp, there joining us from Sanlam Investments.